You will finally understood smart money concepts after watching this video. So in this video, I want to simplify smart money concepts in a way that even a 5-year-old kid can understand. Most of the information that we can find online is all about retail trading.
Oh, buy at support level.
If you search for how smart money and the big banks trade, you won't find much information about it. And today, smart money trading is probably one of the best kept secrets in the world of trading. And today, I want to reveal those secrets with you. To you. Once you learn how smart money trades, you can implement these concepts into your style of trading and make even more money. So let me explain to you some smart money concepts that you must follow so that you can finally become a profitable trader. So firstly, let's talk about boss or break of structure. So in an uptrend, price will be looking like this. You'll be making your higher highs and higher lows. Every time price breaks through a new high, this is what we call a bullish break of structure, or BOS, boss. So there's a break of structure here, there's another break of structure right here, and another break of structure right here whenever price breaks the previous high. So at some point of time, price will eventually lose momentum and start reversing in the other direction. And for this reversal to be valid, price has to break the previous higher low. So this is the previous higher low and price has to break below it for it to be valid. So once this move has happened, this is what we call the chalk, or rather a change of character, chalk. In order for this chalk to work, we want this previous high to be an area of interest, like either a supply or demand zone or an order block. So the stronger the zone, the better it is, right? The better this chalk will work. Once we have a change of character, the chalk, and an area of interest, your supply zone, we can expect price to reverse and start going down. And then as it starts to go down, it will create your lower highs and lower lows and lower highs and lower lows. And as price creates your lower highs and lower lows, it will also create your bearish break of structure whenever price break through a lower low. So when price breaks through a lower low, it creates another break of structure right here. So this is our bullish break of structure, and this is our bearish break of structure, and this is our change of character. And at some point of time, this downtrend will start losing momentum, like this uptrend right here, and it will start reversing back up, and this will create your change of character right here. So this is pretty much the whole concept of this smart money concepts, break of structure and change of character. For this strategy to work, we want the area of interest, this zone right here, this supply and demand zone, to be as strong as possible, because the stronger it is, the more likely the price will move in the direction that you want it to. Now, what do I mean by strong area of interest? There are two methods that you can use. The first method is what we call the liquidity grab at a supply or demand zone. Firstly, you need to identify a strong supply or demand zone on the higher time frame, like the 1 hour time frame or above. So the higher the time frame, the stronger the area will be. And what you want price to do is your liquidity grab. So what is a liquidity grab? A liquidity grab is basically a forced breakout, right? In this case, where price breaks through a recent high or low, does a fake out like this, and then reverses in the opposite direction. So the psychology behind this liquidity grab is that people will be entering for a sell when price breaks through the recent low, because this is the recent low, and when price breaks through the recent low, the sellers will be selling down because they think that this is a downtrend, right? So when they enter for a sell right here, they're going to be placing their stop loss above the last lower high, which is right here. So if price end up doing a false breakout and price actually comes up, it will hit all their stop losses, adding fuel to the fire and increasing the momentum, causing price to shoot up. So we can take advantage of this by entering for a buy position somewhere right around here and make money as price goes to the moon. The second method to find a key area of interest is by using order blocks. So an order block is basically an area where the smart money and big banks likes to enter and exit. So how do you spot order blocks? You spot order blocks by looking for strong reversals like this. and this and this. You can see whenever price goes up here, it reversed down strongly, and when price come back down here, it reversed back up strongly. So this level right here and this level right here is what we call the order blocks. Now let's combine whatever that we just learned, and I'm going to show you a high win rate smart money trading strategy. So for this strategy, make sure that you are using a higher time frame like the 1 hour time frame. The first thing before you do anything is that you want to mark up your key levels or supply and demand zones by finding where price is reversing or respecting. Right here, whenever price goes up here, it always collapses 1 time, 2 times, 3 times, 4 times. So this is a very strong supply zone, and I can draw another demand zone at this key support area right here. So now I'm going to show you this strategy on GBP USD, the Great British Pound against the US dollar. We can see that there's a support area right around this area here, because whenever price come back down here, it always reverses, come back down, reverses. So you can see price has just been respecting this support level or demand zone, whatever you like to call it. And over here, price gave us a liquidity grab. So the first thing you want to look for is for price to give us a liquidity grab or a forced breakout at a supply or demand zone, which is exactly what price gave us here. Price broke through the support level, and then it just went back up. So this was a very clear forced breakout, or what I like to call liquidity grab. Now you can even mark up your break of structure here, and the next thing you want to look for is a change of character. Price must make a change of character after the liquidity grab. Do not take that trade if there is no change of character. So it's very important that you look out for a change of character after the liquidity grab. So I can spot a change of character right here, because this is the last lower high before price collapse, and then at this point of time, this is when price has broken the last lower high, breaking structure, causing a change of character. Now next, when do we actually enter for the trade? We enter when there is a fair value gap. Now, what is a fair value gap? A fair value gap is when price goes up or down so fast that it doesn't give buyers or sellers enough time to enter the market. Therefore, it creates an imbalance in the market. So price will usually come back up or come back down to this fair value gap and reject it. And that is when you can enter for the trade. So you can mark a fair value gap by using a rectangle tool to mark the previous candle's wick before the big move, and then taking the next candle wick after the big move. So right here, this will be your fair value gap. So there are bullish fair value gap, which is basically a big fat green candle, and there is also bearish fair value gap like this big red candle right here. So back to the example, you want to enter for a buy when price has came back down to our fair value gap. So in this example, I can spot a fair value gap right here. You can see right here there's a fair value gap, and right now what we want to do is to wait for price to come back down to retest this fair value gap. Then that is when we can enter for a buy. And the reason why I mark this as the fair value gap is that if you look towards right here at this candle here, price went up super fast, right? Went up super fast, gave us a big fat green candle. This candlestick wick, the next candlestick wick, and the candlestick wick before it, I marked up the entire box, giving us the fair value gap. So I want you to know that price can come to the middle of the fair value gap, reject it, and then continue going up. But at the same time, remember, price can do anything it wants. So price can also touches the fair value gap, which is like this area here, just touches it and just reverse and head back up. So if you were waiting for the price to go to the middle, you would have missed out on the trade. So ultimately, it's really up to you on which way you want to do it, right? There is no right or wrong answer. So in this trade, I would have entered for a buy right here when prices came to the middle of this fair value gap, and it's showing me some sort of signs that it's going to reject it and head back up. And I'll place my stop loss below the fair value gap, and I'll place my take profit at where price last stopped at. If you look towards the left, there's a little resistance area being formed right around this area here. So that is where I should place my take profit. And as you can see, this was a 1:3 risk to reward ratio trade. Very beautiful trade. And the thing about trading fair value gaps is that you are able to get those nice sniper entries, which will give you a high risk to reward ratio. This trade smashed our take profit right here. Very beautiful trade. And the next thing I'm looking for is another trade. So to show you this strategy works, I'm just gonna be continue using this strategy on this chart. So let's wait, and you can see at this point of time, price created another resistance area, or that's rather a supply zone, and it gave us a liquidity grab right here when price broke through the resistance and then it came back down. So this was a false breakout. So this was a liquidity grab. And the next thing you want to look for is a change of character. This is a change of character right here, because this is the last higher low before price goes up and like failed to break past, right? So this was a little change of character right here. Price came back down, broke through the last higher low, giving us a change of character. So the next thing I want to do is to mark up my fair value gap, and I can mark up a fair value gap right here because I saw there's a huge push down and there's a big red candle here. So I'll mark my fair value gap right here, and you can see price has went back up to retest the fair value gap. So this is where I will enter for a sell position. When prices came back up to retest this fair value gap, enter in the middle of this fair value gap, place your stop loss above this fair value gap, and take profit all the way down at the next key level. And I can see there's a support level right here. So I place my take profit right there. And once again, this was a very beautiful trade. We end up smashing our take profit on this trade. It's really as simple as that, guys. I know that a lot of YouTubers, a lot of people on YouTube have been trying to make smart money concepts very complicated, very hard to understand, so that you guys can buy their course. And I'm telling you, it's complicated, but it's not that complicated. It's still doable, alright? It's still doable, and I'm here to help to simplify this entire process because I understand how you feel. When I first started learning about smart money concepts, all these BOS, chalks, BOS, fair value gap, all these foreign terms, I have no idea what the hell are those. And then I went to do my research and I end up being even more confused than I already am. I hope that like this video was able to like help to simplify it. But do not exit this video yet. I'm going to show you more examples because I understand a lot of you guys still probably do not understand this strategy yet, and you have to understand this strategy if you want to trade smart money concepts. So right here, after we close this trade, once again, price is at this support area right here, consolidating around this area, and there's a break of structure over here when price broke through the last high right here. And then at this point of time, price went back up to the same resistance area that we have drawn, and it gave us a liquidity grab once again. Gave us a liquidity grab, and then this is the last lower low or last higher low. And right now, price has broken this last higher low. So once price has broken this last higher low, it gave us a change of character. When price gave us a change of character, next step is to look for a fair value gap. And I can see a fair value gap right here, this big red candle here. And you can see the price went up to retest it. And if you notice, price did not go to the middle of this fair value gap and then go down. It literally just went up, touched the fair value gap and go down. So this is exactly what I mean by what I said just now. Sometimes price can just touch the fair value gap and then just collapse. So in this case, if you were waiting for price to go to the middle of this fair value gap and then go down, you would have missed out on this trade. But like I said, ultimately it's still up to you. So I'm going to show you one last example, and you can see I've drawn some break of structure, and honestly, break of structure, you can draw it on your charts, but this strategy is more about change of character. So right now, price has been collapsing, coming down to our beautiful support area right here, this beautiful strong demand zone. Price literally gave us a huge liquidity grab right here. False breakout, huge liquidity grab. So the next thing I have to look for is a change of character, and I get a change of character right here because this is like the last high and price has broken the last high right here. So this was a little change of character. And actually within this move, I can actually spot another change of character somewhere right around here. Because if you look closely, right, this price was trying to create a new like lower high and lower low and lower high and lower low, and it failed to do that. So price actually gave us a last lower high right here. So the moment price break through this last lower high, that will be your change of character. This thing is so damn long. Let me just shorten this thing right here, put it right here. The moment price start breaking through this last lower high, this is the last lower high, and price broke through it, this is your change of character. So right now, I can spot a fair value gap right here. And I'm waiting for price to come back down to retest this fair value gap, which it did right here. So the moment price start coming down here to back to this fair value gap, I'm going to be entering for a buy right here. Place my stop loss below this fair value gap. Place my take profit at the next key level, which is right here. There's a key level being formed right here, right? There's a resistance area. So you can see once again, this was a very beautiful trade. And it really is all about rinse and repeating this same thing, right? I have shown you that this strategy works. This chalk, boss and cocks, this strategy work, alright? I'm gonna call it boss and cocks strategy from now on. It's a very beautiful name, very easy to remember. So make sure that you go apply whatever you just learned on the charts and integrate whatever you just learned into practice, because that's the only way you can master smart money concepts, by practicing endlessly. Like this video if this video has helped you guys out. I really tried my best to simplify smart money concepts, which is a super complicated concept, into a way where like a 5-year-old can understand. So smash that like button and hit on that subscribe button for more weekly trading videos. And if you want to learn about how I trade using price action, check out this video right here. Trust me, this strategy is 10 times simpler than the freaking smart money trading strategy, alright? Click on this video right here to find out more. And remember, you're just one trade away. Mwah.